second half of 2020, Nvidia agreed to buy ARM, creating the premier computing company for the age of AI for $40 million. The deal has not yet been finalized, but it is working through the hurdles. Additionally, Nvidia has been riding the market wave and the limited semiconductor availability. On May 21st, 2021, Nvidia announced a 4-for-1 stock split. Between the announcement of stock split in May of 2021 and the stock split taking place in July of 2021, it's up 24%. Hi, I'm Jonathan. I bring you the market news and context through the lens of believability so you can save time, trade, invest your way, and make money. The question, however, remains, what's next? Where do we go from here? To answer this question, let's look at some evidence. From a very high level, we can see that Wall Street is very, very bullish. Both the analysts and the financial media are expecting great things for Nvidia over the coming weeks, months, and years. Market Insider reports 26 of 27 analysts, Wall Street continue to see only green for Nvidia, as 26 out of 27 analysts rated a buy. Analysts such as Deutsche Bank, Edward Jones, and Raymond James. As recently as the stock split, Citibank has increased their expectations. The Nvidia one-year price target was raised from 180 to 223. Per share earnings are expected to increase both consensus and the range from analysts. The picture from the buy, hold, sell rating system has only become rosier for Nvidia over the past 3 months. The expectations for fiscal year 2022 and 2023 have been improving over the last 3 months. One analyst believes that Nvidia is still the best buy of the decade, even though the decade has just begun. The bottom line here is that Nvidia is going higher, at least according to the analysts and the media coverage. Let's remember that analysts require information. They get this information from the companies that they're analyzing. This means in order to continue to receive this information, analysts need to toe a line from being too critical, or else companies are just going to shut them off. No more. With that in mind, we need to take these recommendations and these expectations with many grains of salt. Nvidia has many product lines. Something that's good to remember about these different products is that Nvidia is usually regarded as the leader in almost all of these product lines, or at least a significant player. Graphics and entertainment, laptops and workstations, cloud and data center, networking, GPUs, embedded systems. Let's take a few highlights from Nvidia's most recent earnings release to see what they say about themselves and about their future. Record total revenue, gaming revenue, data center revenue, and professional visualization revenue. These record revenues were driven by demand for GPUs and the growth in data center. They talked about their Bluefield 3 data center infrastructure processor. They talked about their new Grace CPU, which is developed from ARM technology, which specializes on AI within data centers. They're using this to build a new supercomputer. Nvidia is very bullish on themselves, and they probably should be, as should all companies. I'll take a look at 2 comparable stock splits over the recent times to see how they compare and what we can take from the performance of these 2 stock splits to read it to the expectations for Nvidia's future. For these comparisons, I will be using Apple and I'll be using Tesla. I'll be using these because they are large companies, examples of large stock splits. They had similar split ratios and they are relatively recent, within the last year. Leave me a comment down below if you have another example you think I should have used. Tesla announces a 5-for-1 stock split. The Tesla stock split was announced August 11th of 2020. It was completed on August 31st, 2020. The Tesla stock split was a 5-for-1 split. Between the stock split announcement and the stock split itself, Tesla was up 81%. Over the first 6 months following the stock split, Tesla was up a further 29%. Over this entire time period, Tesla was up 134%. That's a huge number. Apple announced their stock split on July 30th. They also implemented their stock split on August 31st. Between these 2 days, when the split was announced and when it took place, Apple was up 34%. Between the end of August and end of February, Apple was down 6%. Down! I can't believe Apple went down. Looking at the entire period from the end of July 2020 to the end of February 2021, we can see that Apple was up 26%. This is a very solid performance. Tesla almost doubled between the announcement and the actual split, while Apple had a very good run between the announcement and the actual split. Tesla proceeded to have a good run over the next 6 months after the split, and Apple had a -6%. If we look back to the performance for Nvidia between the announcement and the split, we can see that it was more in line with what Apple did than what Tesla did. Therefore, I believe that the Apple example is more likely to be a reasonable comparison than Tesla for our expectations. While I believe analysts, the media, and Nvidia themselves believe what they're saying and they mean what they're saying, I think their opinions need to be taken with lots of grains of salt, maybe even piles of salt. I don't put a lot of weight into their opinions because they say the same thing all the time. I value the data that we have looking at Tesla and we have looking at Apple. I also think that the chip shortage is already baked in and that 2021 is not 2020. 2020 was a phenomenal year for a lot of companies and 2021 is a good year. My expectation is that Nvidia is more likely to trade sideways like Apple did than trade higher like Tesla did in their first 6 months following their stock split. I don't think this is necessarily a bad thing or an indictment of the company. I just think there's a cooling off period that needs to be observed after the stock split. Leave me a comment down below to let me know what you think I should tackle next. Two topics I have in mind are Raytheon versus Lordstown Motors and the continuing domination of the coal industry from BTU. If you have something else in mind, let me know in the comments. That's all I have today. Jonathan out.